because the index keeps rising, they really have been on the back foot. So big money is not always smart money, but they can move a lot of money around and make hay while the sun shines because they can move charts. And so what we want to realize is the following. There's an undercurrent of negative pinning. And so every time the market dips, the traders who've been short realize they're on the back foot. And so we're always catching a bid. And so while we're always catching this bid, what we'll notice is we're not going to see follow through in the price action. We're going to see it reverse, and we're going to see what I like to call piano keys, because essentially the candlesticks very nearby each other have a tendency to retrace each other. So if you're thinking about taking notes for the next week, remember, recent past has a tendency to predict near-term future. And what the recent past is telling us is that any deep dips get bought and big spikes get held as traders are thinking that they ought to have a nice short, but as it comes into the shorting process, because trend is up, they end up catching the bid. And so those of us who've been looking for reversals because we're thinking, hey, this market's bananas, we're not getting what we want. So the big thing to notice is, one, trend is still up. Momentum is mixed. And so today I've got the Chandi oscillator here, but you can use anything you want. You can use a MACD, you can use anything you want. Above zero, which this momentum oscillator actually is, you measure it above 50, I think. Yeah, 50. And no, this one's zero. Rain hemorrhage. Sorry about that. So above zero, we still have those bullish dips. Below zero and underneath moving averages, we've got ourselves negative pressure. And you'll notice, I'm looking at a 1-hour chart for all of last week. So this is Friday, Thursday, Wednesday, Tuesday, Monday. And here, the oscillator is above zero most of the time, and the moving averages are also trending up. Remember, trend is master and commander. So whether you use a 1 minute or a 1 hour, trend is going to tell you relative direction. If you're a scalp trader, maybe you've had a good shot at catching things for a couple of points and then getting out. I still suggest that, maybe that's not a bad way for us to trade, particularly if we don't want to expand risk. And that's kind of important. We really don't want to expand risk, especially as we're using our TopStepX accounts. So we're going to stare down the ES. We're going to look at how motion, let me double check. Thank you so much for the kind thoughts. We're going to check and see what the option chains are telling us, and then we're going to look at what kind of price action we might see based on where the volume was sitting. And then we'll talk a little bit about, why is it that we make the same mistakes over and over again? Because remember, trading well is about making good decisions consistently, and that tends to break for two reasons. One, we're still perfecting our process, and two, we have cognitive dissonance where we are thinking, hey, I know I'm not supposed to do that, but I'm going to do it anyway. And we'll talk about why that happens. So let's first look at the biggest move of the last several trading days. That occurred on the 5th of September. I believe it was some sort of, maybe it was a CPI number or something like that. Doesn't really matter what it is, just how they responded. And so I want to do a fib retracement from the top of the move to the bottom of the move. Now, some of you who watch me carefully, you're going to go, wait a second, Emery. Why are you not drawing the fib on the volume candle? That's the highest volume on this hourly formation. Well, I'm just staring things down in general, okay? I can do both of those. I like to measure the 30-minute candlesticks. And so if we do that, we're going to see this 30-minute candlestick that gives us the highest volume is interestingly at 10 o'clock. And so we're seeing some price patterns that are a little bit more unusual. So here are some stats. Thought I'd give you some stats. Here are some stats. One, the early market between the opening tick that we're going to get in just a few minutes and 7:30 a.m. usually gives us 10% of the entire trading day. 40% of the entire trading day's volume comes between 9 o'clock and 10:30. That's in general. So what that gives you a notion of is, okay, most of the traders are positioned at this time between those areas, and so what they do is going to be very important. Here's one of the things that I think is really critical as a trader. Tell the story of the candles in terms of a story, right? What are they doing? Who's in charge? Where is support? Where is resistance? What is trend? These things matter a lot. Coming into a chart and just saying, hey, listen, I'm going to trade the 820 exponential moving average crossover. If the 8 crosses down, I'm going to short it. If the 8 crosses up, I'm going to go long. Now, that's fine. It's going to give you about a 58% accuracy of moving in one direction or another, but the risk might be very outsized if the 8 moves down and essentially everything in the market is going up. If you choose short, it's not going to be the right way. So my thought is always take a big moving average, look at that big moving average, and then say, you know what, I'm going to work my trend from there. And so this is what I do. So if we take a look at these two measurements, I measured the hourly from high to low of that wave that we saw on the 5th of September. And then I'm drawing this 30-minute wave that carries the majority of, whoa, that's not it at all. Look at that. That's the 1030. Oh, this is a volume exhaustion candlestick. Let's do this one also. Messy. Way higher. So the ranges of these formations really end up giving us a series of motions where we go, wow, what do I want to do here? Especially if my 1030 candle has the most volume. You can certainly look at that and go, all right, once I'm above it, I know I can trade in that general direction. So let's quickly set up what's happening tonight so that we know where we're going when the market opens up. What is trend? Up. Where is momentum? It's slightly positive. And so let's take a look at the last 30 minutes of the trading day. And I'm going to put it in one of these. Right? We know that price follows volume. Okay, so this is the range that we're looking at. That was Thursday. Now we're going to look at Friday's closing formation. And you'll see that they're very similar. Right? Let's use a box for this one. The range is fairly similar. It loses the bottom, it comes back into this box for Thursday's range. So really, where price is sitting right now is at the low of the closing candle of Thursday. So very important zone right here. What do we have also? We've got the volume point of control. And that volume point of control tells us, hey, this is where everybody's arguing. Now you will notice that people argued all day long, but every dip was bought until the very last dip of the day, which came down and it still had held the low. So this is where we're sitting. My thought is, as long as we hold the low, which is 65.83, is that right? My eyeballs. Yeah. Yeah, 65.82 or so. As long as that holds, we've got ourselves a very sideways pocket of motion. Now, here's the thing. To me, this looks like a megaphone. And so what we are potentially exposing ourselves to is a megaphone pattern because we have so much bearish hedging as well as bullish motion. So they're going to stretch the edges of this chart. And so if they stretch the edges and we do have a rotation down, this low of Friday is going to matter. And indeed, potentially the high of Wednesday will also matter. So here we are, beginning the day, ding, ding, ding. The option traders have built $35 move today, right? So from this open right here, $35 to the north is priced in the option chain and $35 to the south is priced to the option chain. Now, are the option traders always right? No, they're not always right. They could be wrong, but this gives us a good shot of knowing where we stand, right? So if we stare this down and say 89, let's call it 90, and we add 35 to it, that's 6,625 as the high end, where they've priced in the volume formation. It's pretty interesting. 6625. So we know there's something likely there. If we choose the $35 below it, that's going to be 35. No, 35.55. And so we'll do that, right? Somewhere around the 35. Am I doing that multiplication right? Yeah, maybe 35. Yeah, 35.60. Somewhere around there. Okay, so that's the range that the option chains have put us inside, which means we could move up, we could move down, but as long as we don't go below this 65-60-ish area, or we don't go above 66.25, the option traders are going to win. And this is a signal that we've got a little bit of expanded volatility, but very choppy price action. And so in this case, where we've got price action that's upward, momentum that's almost flat, right? We have negative 19,000 showing on cumulative delta. This is an absolute mixed bag. When we have an absolute mixed bag and we are thinking about taking overnight trades, I say go to the wishing order, like John likes to talk about, John Hoagland, goes to the wishing order and we say, hey, let's see if we can get a trade in the overnight down here at about 65.60.
Order filled. Order filled.
Right? So if you're thinking about this and you're like, man, why can't I just take a short down there? That would be huge. We have no idea whether it's going to be a short. We have no idea if it's going to get caught in here. And really right now it's a coin toss. It is. It's a coin toss. Somebody says, hey, I'm going long at the NQ. Listen, that's not really unreasonable to go long. The question is, what's your risk? Where's your target? And have you managed your size appropriately, right? In my mind, the first place I'm going to see the traders come in is probably around here. This 65.81 to maybe 65.84, right? 65.80. I don't want to miss out on this trade, but I also don't want to get in too early. So what are we seeing? Sideways action, big fat range, all kinds of levels in between here, and candlestick motion that's holding us all the way from Thursday and Friday sitting in this edge. Okay, let's take a look at the NQ. Okay, so someone says, hey, I'm going long. Let's do the same thing, the NQ. Right? Let's look at where the biggest volume candles are. Here is the 30-minute opening candlestick on Friday. That edge is somewhere around 24,063. The option traders are looking for 171 points of motion, potentially, that they're pricing in to the charts. And so as we can see this, we can see, okay, they might come down here. That might be a good buy. Let's see what the closing volume is. Okay. Closing volume for Thursday is, whoopsie. Closing volume for Thursday, high volume, yep. It looks like 24,040, right? So if I were looking for a trade that was going to try and sit in these ranges, my thought would be, hey, I'm going to try and get a position that's fairly close to the volume point of control. And I know I'll have a little bit of stickiness in here, but it's also the high of the opening 30-minute candlestick for Friday. So that feels like I'm right in the middle of that space. If you're trying to be aggressive and you're thinking to yourself, well, wait a second, here is the 30-minute close for Friday. If we stare that down, we can see we're right in the middle of that candle. So the buy zone is really close to the bottom of that candle if it's going to hold. Now, momentum is much higher, right? It's well over zero. It's also trending down, but that happens when a chart moves into frontline support. So you could absolutely say, hey, I want to trade this long in some kind of scalpy kind of trade, right? You could go to something like a 3-minute and you could say, all right, I see that. I might be able to trade from this point right here, 24,105, all the way to 21,116. Now, is this my kind of setup? No, it isn't. And the reason it isn't is because I'm right in the middle of a range. And so, interestingly, I can look at a 3-minute chart and I can see the very highest volume came at 3 minutes before the close on Friday. So if it gives me a bounce, it's pretty likely to stall out at maybe 24,120, something like that. That would be more than fair in my mind in terms of what the price action might do. Again, very sideways. A lot of coin toss kind of trades, right? You can try the bottom of the range and then close it off into heavy congestion. You can also look at those 3-minute volume candles. You know, Jay does that also. That gives you that range of motion. And it also shows you that great big pocket that we had into the close. All right. Deciding on a trade is usually the toughest thing to do because there's so many ways to go into the market. My favorite thing to go into a market is a bounce off support or a fade off resistance. I enjoy range trading quite a bit. However, you know, trending trades really deliver the biggest bang for the buck. And so when you've got these very sideways motions that run hot and then frankly collapse, it's very hard to find motion that continues in a nice solid space where you're not second guessing the direction. And see, the reason that we're sitting in these pockets is because that's what the institutional traders are doing also. They have no idea what these cross currents are going to deliver. People are betting that we roll over in October. People are betting that we shoot the moon in October. People are betting that we roll over in November. People are betting that we shoot the moon in November. It is a complete cross current. But the big thing that's happening over the last 3 weeks is that institutional traders are flattening at the end of the day. That's where we're seeing these big pieces of volume come in. If we stare down our 30-minute charts, we'll see very big volume. I ran a couple of statistics before we had the show, and it told me that over the last 7 trading days, the average closing volume in the futures has been more than 200%, 2 times what it normally is. And so that's a signal that institutional traders are flattening out at the end of the day because they don't want to hold a trade into the next day. And if they don't want to hold a trade into the next day, why would you or I want to hold a trade into the next day? All right, let's see. Well, hello, everyone. Let's take a peek. Let's see what's going on. Yeah, it is very choppy. The question is, how do we manage that chop? Do we collapse into tight time frames and make a lot of trades? Or do we sit back and wait? And that's got a lot to do with your temperament as a trader. I used to be a very active trader. I mean, I would make 500 trades a day, way back in the day. And then I dropped to 200 trades a day. Now, I might take 4 trades a week. And so the question is, what do you want to do when you engage in the market? How quickly do you want to move? And then once you decide that, do you have the necessary focus to drill in and say, you know what, that's what I'm going to do, right? So the person who said, hey, I'm going long at the open, notice it faded on them a little bit, but it is a little bit higher than it was at the open. The question is, where are you going to? If you go long and you look at these big time frames, and you can see that we're trapped in the range of the last 30 minutes of the prior trading day, it's telling you that in that volume profile, in that area, the TPO, it's caught within range and within value. And when that happens, it can go in either direction. So taking a trade right in the middle is almost a coin toss. And so if you say, hey, I'm okay with a coin toss, that's 50%. The question then becomes, can I hold the middle of the range of that candlestick? And if I can hold the middle, then I might be okay. The next thing you have to ask yourself is, what is the entire range of this candlestick? And this candlestick is 80, 70, 60, maybe 50 points wide or so. So if you get in the middle, that's a 25-point stop to the upside, 25-point stop to the downside. And then, your goal is going to be, that's going to be a one-to-one. The risk to reward, you're going to have as much risk as reward, simply because the chart's not telling you it has the opportunity to break out at this juncture, but it could, right? And so that would be what you would want to stare down. So here, that's us on the NQ. We can move. Let's collapse it down to a 5-minute. We'll notice that the volume is very thin. The 5-minute candlestick is this one right here. And so now we are inside this candlestick. It's very likely that we get to the top of the candlestick. And so if you were saying to yourself, hey, I want to take this trade, and oopsie, and you say, hey, I'm going to buy this, right? Let's say I'm going to buy this, right? Because my thought is I should go to the top of this candlestick. You can easily look at that and track your volume and say, hey, I'm holding this edge. I'm now in the middle of this candle. It's got the highest volume. I should go from bottom to top, right? Easily. Now, where's my risk? It's really at the volume point of control, right? That is my risk event right there. But you can frame out simple trades like that just say, hey, where is my biggest volume event? Have I come down to test it? Is my momentum up? Is my overall trend up? Can I go into the top of that candlestick, right? Now, if you can't get up there, that's telling another story, but it should be able to get to the top of that candlestick, since that's what price normally does. It goes from the bottom of a range to the top of a range, to the bottom of a range, to the top of a range, until there's another big volume candle, and then something else happens. Okay? All right. I'm from Turkey. Can you show me multiple time frame analysis? Okay, so let me think about this. I do multiple time frame analysis. What I have a tendency to notice is traders who are unable to focus on a lot of different things at the same time really have trouble with multiple time frame analysis, and they get themselves confused. Listen, I like multiple time frame analysis. I use it. However, my thought is it's much better, if you're looking at a tight time frame, it's much better to use a long moving average, a moving average that's pretty significant. I've got these all wonky, so don't stare them down because they're a little bit crazy, right? I'm using the smoothing one to actually give me my 50. But if you have a big moving average and then you smooth it out, or you have a bigger moving average, it will tell you directional flow. And so you actually don't need multiple time frame analysis if you're trading the futures. And although I would love to sit down and do that with you, I actually essentially did, because I went through the 1 hour and then I went through the 30-minute, and now I'm looking at the 5. So I essentially have gone through multiple time frame analysis. You just have to go from big to small, but focus on where the volume is telling you the traders are fighting from. Volume represents a sandbox that they all drop into and begin to argue around until they fall out of the box and go someplace else. So our job is to trade that range, trade that volume analysis, and go from low to high or high to low, depending on trend, right? If the trend is up, you want to go from the bottom of the volume event to the top of the volume event. If trend is down, you want to go from, here it is, this trend was up, and then it lost all of its motion, failed the retest, and then came down again. So it's just a matter of looking at where the big pockets of volume are and then saying, you know what,
Order filled.
I'm going to trade in that big volume pocket. So a lot of us know this. A lot of us know that price follows volume, right? Some of us are super skittish, so we might see a trade and go, oh, I got to get out now, rather than take it to where it's most likely to go, and that's okay. Right now it is stopping right at the edge of this volume formation. So it could rotate over, it could move up. Momentum is telling me, for the meantime, the price action is going to try and move in this direction in general, because the moving averages are also moving in that general direction. So that being said, we know these things about volume. We know how they rotate. We know the price follows volume. And we set up a trade and we think to ourselves, you know, I know I'm not supposed to do this because
Order
I know
filled.
this probably is not going to work, but I think I'm going to do it anyway. And we get into a trade and we do it like that. So the question is, why? And I want to suggest something. What we actually have in our brain, we remember the times where that went right. We do. We remember, I remember doing this and it really worked out in my favor. And we have a tendency to forget the times it didn't work in our favor because our goal is, hey, I'm going to pull on the slot machine handle. Our brains are sadly engineered to, when we're working with these kinds of things, our brains are engineered to look for the outlier as what is most likely. So if we say to ourselves, hey, this is a trade that I like because I think it's going to roll over, right? We'll trade a counter trend trade. Every counter trend trade we take is an outlier trade, a trade that's not as likely as the trending trade. So if you're like me, what you just said in your mind is, I've taken plenty of counter trend trades and a bunch of them have worked. That's the anchor of why you choose a trade and you go, I know this is counter trend, but this has got to roll over. Or I know this is counter trend, but it's got to have found its bottom already. I mean, come on. And these sorts of things, because our brain working in here is engineered to that dopamine event that's going to feel the best when something on the tails work instead of the fat part of the curve. And so we have that internal battle. And so we'll choose it, and then we'll cost average in, and then we'll just lose control of the entire process. Now, I'm not sitting here telling you that I don't do this. It's just a part of the human condition. The question is, do you manage your risk while you're doing something like that? And then after every trade, do you learn the lesson that the market has taught you? So I want to ask you a question. Tell me right now in the chat, if you often take trades that you want to work, but you're thinking they might not. That should be all of us. We'll go, yeah, I want this trade to work, but it might not. That's just how the trade is. So yeah, a bunch of us do that. How about this? How many of us actually stop after each trade and say, what did the market teach me in this last trade? And actually put some words down that tell us, hey, what did I learn from the market? If we say, hey, I don't do that. After every single trade, I need to see what the market taught me. Yes. Why? Because every trade is a classroom event. It's a tuition event, right? You either get paid for being right or paid for being wrong. You get negative payment if you're wrong. But the market's always teaching you a lesson. It's always sharing something about itself when you get involved with trading it. So if you might allow me the latitude, the market is like an entity that you're having a conversation with. And the way you have a conversation with the market is you put a trade on. And your goal is to find out what this entity is doing and what it's thinking based on how your trade turned out. And so if you take that framework and you look at it, I don't know, have any of you guys seen the thinking game on Amazon? It's so good. It's about DeepMind. It's the company that Google bought. It's absolutely fantastic. So what they're trying to build is a generalized, intelligent entity, right? So they'll put it in a room and tell it, hey, listen, the only goal of this game, put it in a game, the only goal of this game is that you win by getting the most points, and so just go figure it out. And so that's what this thing does. It just goes in and learns. It has no idea what the rules are, just throws it in there, and it just learns from the interaction how to get more points. And it turns into this, amazing thing that can learn, machine learning, from what's happening in the environment. The way we want to interact with the market is the same. If we put a trade on, this entity that we are working inside of the construct of has mysteries. And those mysteries are going to get partially revealed based on how it is your trade performs. So if the trade goes well, it's going to tell you something about your premise, the market's premise, the essential risk event that the traders have, and potentially what the next event is going to be for the market. Now, you might go, man, she's a kook. I am. I'm a little bit crazy. But what I love is the discovery of what the participants inside of this game are doing, and I can figure out what that is if after every single trade I go, all right, what secret did you reveal to me here? What did I learn about you in the last hour? Is it that you're indecisive, that you're caught within a range, that you're nervous, that you're bullish, that you're bearish? It's going to tell you something, and likely it's going to tell you a lot about the next near-term move. And what we have a tendency to do, and I don't know how to help folks get past this. I literally lay in bed at night going, okay, how can I transform this notion into something that's usable for traders? Because my goal is always, I want to get folks to see the market as this thing that is alive and really moving based on the emotions and thought processes of all the folks that are engaging. And so if there's one takeaway that I could give you, that I could say, hey, listen, the week's starting, we got a lot of new things going on. Take the time to slow down a little bit and go, what did the market reveal to me about itself at this time? It's going to reveal something to you every time that's different. It could reveal things that are the same. So let me give you an example. And then, of course, I'm yammering along, and I think it's probably pretty much time for me to go, but I'm still going to go ahead for a little bit. So, oh, no, I got time. Great. So here we are. I put this trade on. Here's my premise. My premise is trend is up, right? Momentum was up. It's still sort of up. Now it's a little bit sideways, but trend is still up. And so my thought was, hey, it already got inside of this box. My risk, therefore, is right around here. This is where my stop zone would have to be, right? Not delightfully small, but, fine, right? So I got a stop sale. That's how I put my stops on. So I expect it to go from the bottom of this box, at the bottom of this candlestick to the top of this candlestick based on the overall rotation in the market, knowing that position-wise, I could have gotten, you know what, maybe I can add on the way down as long as it recovers that zone and does not stop me out. So we'll see, right? But look at what it's telling me right now. My thought is, hey, it's going to the top of the box. My risk is the bottom of this candlestick, right? So I know what my risk is. I'm just fine. I'm waiting for it. What is it telling me right this moment? Well, it's telling me that it's indecisive. How do I know that? Because the candlesticks are retracing each other, right? Now, the candlesticks are retracing each other, but I'm still making higher lows. Something else the chart is telling me. So I am learning about the market in this space, and I am logging in my mind, okay, it's still holding higher lows. It's not giving me higher highs. I don't like that. But currently, it's telling me, listen, you're just fine. Hang out in here. See if it breaks through. Otherwise, you've assumed your risk. right? It bounced right off settlement and then moved up, and so we're above settlement. We'll see if we get to there. Whether this trade works out well or doesn't work out well, my risk is established, my target is established, and now I can say, well, if it were ideal for me, where would the ideal entry have been? Well, it really would have been, here's settlement, it really would have been somewhere up here above the settlement, but also above that low of that candlestick, right? So, I mean, what am I? I am probably, I'm 7 or 8 points above an ideal entry for me. But I took it simply because I wanted to explain, here's how you look at a chart and say, what am I learning from this position? One of the things that you can do when you sit around like this and you're watching the market, while you're talking through it, it's going to stop you from getting the wiggles. Oh, I got to get out. It moved up 10 ticks, and then it moved down 7 ticks, and then it moved up 20 ticks, and it doesn't matter. The relative motion is what's going to tell you what's going on. Okay? It'll also get the wiggles out because you're focusing on process and learning what you can learn from what the traders are telling you that they're trying to do. And, they're telling us that they are trying to hold the floor, but that they're fairly sideways, right? They're really dancing around this zone. It's very, very important. We can look to the left and see where that zone might be that they're staring down. Let me go to a 30-minute again. Let's see if we can find where they're. I cannot believe I'm trading the NQ. That's bananas. All right, so here is, no, that's a 30-minute. Here is the, this area right here, this 230 candlestick is where it's having some significant arguing, and that is almost exactly where we came in. And so that's why it's dancing around that zone. It's holding the low of it. It's just trying to get up into that edge and move forward, right? And momentum is, still pretty positive as it goes. We'll see how that moves. But if you're looking at multiple time frame analysis, the goal is very simple. Are my candlesticks going up? Or are my candlesticks going down? Or are my candlesticks going sideways? If they're going sideways, the best thing to do, what did I do just there? The best thing to do if your candlesticks are going sideways is to look where the sideways action is. When it breaks in either direction, you get to take your trade, right? Sometimes you're going to be right, sometimes you're going to be wrong. That's the market. But literally, you don't have to overcomplicate the world staring down 2 different time frames at the same time. Now, you can, but if it's part of your process, then that's great. If you're still trying to refine what it is you're doing, I'd recommend just sticking with 1 time frame until you figure it out, and then you can move to a multiple time frame analysis. But that's just me. There are, 100 people that would say something completely different. You've got to see what works for you. Okay, let's check some other questions. Yeah, I'm inclined to agree. Shep's new hip. I do. Hi, Bruno. Thank you for being here. Hey, Kochu. Thank you for being here. Yeah, it really, you could trade the forward contract. It's just a big mess. If you talk to a guy like Hoop, who's, been around and really seen the markets move all over the place, I mean, I would reckon to say he would feel the same as me. It's, pretty sticky going in days like these. Some days are just not great trading days. I mean, listen, some days are not good sailing days. Some days are not good surfing days. Some days are not good driving days. Why on earth would trading be any different? And we expect to go in and have our setups work every day, and then we get pissed if they don't. And what we end up realizing is, wait a second, some days are not conducive to the way I like to trade. It just is what it is. What we have to do is figure it out fast enough so that we don't, put ourselves in the dog kennel by doing something silly with our accounts, right? In significant drawdown or whatever. Do I trade the yen? No, I don't. I do look at currencies. We've got a lot of currency movement right now. We've got some interesting times ahead of us in the big picture, but a lot of currency moves right now. I will say this to you. As long as you don't trade a currency pair, which you can't trade pairs here on TopStepX, but if you just trade a currency future, you know, it's the same thing. You look for where volume is, you look for trend, you position, you manage your risk, you set your trade out. If it works, great. You know something about what the market is telling you. If it doesn't work, great. The market's got a lesson to teach you that you did not know about it before you put the trade on, or you wouldn't have put the trade on, right? I mean, I'm thinking anyway, right? So that's what I would say. Do you think matching up SVP / POC levels over a few weeks period with volume range visible? Whoa, Trader Zoe, hello, Kenny. That sounds very complicated. However, Trader Zoe, if it is something that resonates to you and you can use it to design something and replicate with consistency a process that allows you to get in and get out, have at it. There's no wrong way to trade. Here's the thing. The only thing you have to manage as a trader is risk. If you don't manage risk, that's the only wrong thing that you can do. You can trade any way you like, in any form you like, using any indicators you like. Your job is to make decisions consistently based on your process, and indeed, from that process, end up having positive expected outcome over the long haul. To me, because I am a simpleton, truly I am. I know I don't act like a simpleton, I just act simple sometimes, but I do like for my trading to be simple. And so something like that seems very, very hard. Rockin's TJ. Emery, little off topic, but when you put in your stop and take profit on TopStepX, why don't you drag from your entry down to your stop and again to your take profit, and this would OCO? I could definitely do that. I'm just doing this right now because I also cannot multitask. And so I just popped it up there, and I love OCO. I think OCO is the best way to go, frankly. And now we have OCO brackets here, so that's fantastic. Can I hedge between accounts during evaluation? No. You can trade different accounts during the evaluation if you're testing motions. So let me take that back. If you are thinking, hey, I'm going to buy 2 combines, I'm going to go long in one and short in the other, yes, you can't do that in an account that's going to pay you, right? You can't do that. You can do it when you're learning systems and you're saying, all right, I think this is a long, I think this is short. But my question to you, if I were to play devil's advocate, is why on earth would you do something like that? Unless you're thinking, hey, this is 50-50. Because if the goal is process improvement, that would create a lot of cognitive dissonance mentally. Just saying. Yeah. Let's see what else. I have to disagree. And you're entitled to, Ross. That's the great thing. We can disagree with each other all day long. And we can even, here's the thing. Here's what I notice with some traders. Somebody will just pound their fist on, this is going up. And they'll just tell us 1,000 reasons why. And another person will go, you know what, I think I'm going to short that. And then it turns into a great big fight. Listen, that's what makes a market. You're not here to be right. You're here to make money. And you might go, that's the most ridiculous thing I've ever heard. And here's what I really mean. You're not here to win arguments because you're awesome at telling people how charts go. That's not your game. Your game is to go in, make some money, and get out. Doesn't matter whatever Joe Bob or Benny or Sally or Sue, whomever says what. Your goal is to find your jam in the market, get to a place where you are comfortable in a space that you can see replicates a level of consistency, and you get in there and you do it. Right? Listen, somebody could be short right now against me. Right? Not against me, but just trading in the other direction. They might go, hey, this is the high end. Right? But if you are in the game just so you can come back and tell somebody I told you so, your ego is going to send you careening off the side of a bridge. I'm just telling you. It is. This game gets completely out of control if you let your ego be the driver. You just can't do it. You've got to focus on process and manage risk. And then, every time you engage, you got to go, okay, Mr. Market, what did I learn from you? And you might write something down in the very next trade. You might have learned the wrong thing. The market might have been trying to teach you something else completely different. But if you go in time after time and go, all right, what happened here? What should I have seen? What was the market telling me with the price action? And can I use that new information to take another trade? Right? What is OCO? One cancels the other. First time here, shoegaze fan. I was going to ask that question today. I was going to say, who's new? Who's new? And I love it. Welcome. You can't do that because it's against the rules of the CME. Order, yeah, there you go. There you go. All right. Let's see. What are the questions? Do I have a live account? Not on TopStep. I do not. I trade with Merrill. I've traded with Merrill for a very long time. I trade with Tasty Trade. I trade with Interactive Brokers. I trade with Thinkorswim. All of my live accounts are on those platforms. I like to keep all of my cash for myself as opposed to give 10%. Okay. Triple witching on Friday. Oh, I did not know that. All right. Let's see. Do we have... What is it that the micro one-to-one with the mini on Whoa. Julio, what is it that the micro is one-to-one with the mini on Project X versus other platforms with TopStep? I do not know the answer to that question. Well, Jeffrey Reinhardt, welcome. I love it. This is great. I'm so excited. You have Thinkorswim. How do you like it? I got to tell you, I've been on the Thinkorswim platform for 26 years. So I know it very well. It's a pain in my neck for some things. And the reason I have so many different accounts is because of how trading works in other spaces, right? Some platforms allow options to be closed without being charged on the other side. I'm a very big options trader, and so I use Tasty Trade because they don't charge trading orders, right? It's just one of those things. Yeah, the fees are not great. But let me tell you something. You want to talk about fees? Merrill. Merrill's fees are... yeah. So our long-term holdings are in Merrill accounts because it's very expensive to trade there. What is triple witching Friday? Okay, so... triple witching is where the weekly, monthly, and quarterly options all expire simultaneously. That's what triple witching means. So often we will have, at the end of every month, we have options that trade and close weekly and options that trade and close monthly. We also have options that trade and close daily. But we don't count the daily. A lot of people go, oh, it's quad witching, but nobody likes quad witching, so it's just triple witching. And that just means every quarter, there are options that expire quarterly that are also in the mix. But what it usually makes is a lot of volatility. That's what it does. Yeah, you are not kidding me. You know, we've been with them a really long time, and so there are a bunch of things that are kind of free for us at this juncture, but yeah, just my 2 cents on that. Okay, it's a good day to either make mega money or blow up your account. Well, it's also a good day to take a measured approach to the market and learn something about what the market is telling you, right? Hey, I want to thank Hoop and I want to thank Bruno for being here with me tonight. I appreciate all of you that have come in that are new. We'll see how this trade goes, see if it holds. I'm going to leave it and we'll follow up. And if you haven't gotten to the Discord, please do. Top Step Discord has got a tremendous amount of information. You can find a lot of the coaches there. Actually, you can find all the Top Step coaches there. You can learn a lot of really great things from these guys and gals. And you also can connect more with the community and ask specific questions that can help you trade better. I heartily recommend it. And of course, I'm there. And you can ask me questions if you like. So, that being said, thank you so much. And yeah, listen, trading is about making mistakes well, right? It's sort of like the Tom Hugard thing of, you know, being the best loser. And so we have to learn to make good on our mistakes over and over again. All right? Hey, listen, go slow. Am I in a long? Yes, I'm in the long in the NQ. Came up over our formation, sitting in this big volume pocket. So we'll just see if it dances around. Right now, it's not telling me that it's not. Trend is up, momentum is up. It's just taking its own cool time to do it. So we'll give it a little time. All right. Thanks, everybody. I appreciate you. Thanks for all the positive feedback. Thank you, Erin. You're the best. Hit the like button. Annie Oakley. Yes, hit the like. Tell me that you like me. All right, folks. I will see you. We've got Dakota coming up. And then we've got Aaron and Deanna and all the great folks here on Top Step. It's going to be super interesting. We've got the Fed meeting this week. We've got, all kinds of things going on. And it's probably going to be another fireworks week. So, see you later. Don't try to short this market. It's going to shred you unless you've got your risk managed. And then you can walk down your targets. All right? Or, yeah, walk down those targets. Okay, everybody, take it easy. See you soon.
pick you up, though.